Hey guys, welcome back. I'm Jeb Smith, real estate broker here in Southern California, and today we're going to discuss FHA loans in more detail. What are the pros? What are the cons of doing FHA financing? Now, FHA financing is typically associated with first-time home buyers, but it's not a first-time home buyer program. Anybody buying a property can use FHA financing. In today's video, we're going to discuss the positives of using FHA financing and some of the downsides of using FHA financing. But before we dive into that, I want to take a minute and ask a favor. If you're new to me, new to my channel, it's all about real estate, helping buyers, helping sellers navigate the real estate process, whether it's buying a home, selling a home, or discussing finance options like FHA. So do me a favor, if that's of interest to you at all, hit that subscribe button, give me a thumbs up if you like the content, and leave a comment. If you have questions, you're watching the video, I'll go back, I'll answer those for you, help clear up anything, and thank you for taking the time to watch. But let's get into the reason why you're here. So as I mentioned when we started the video, FHA is commonly associated with first-time home buyers, and that's because FHA allows a minimal down payment. And that's going to be one of our first pros of FHA financing, is that they do allow a minimal down payment. They allow you to purchase a home only putting 3.5% down. So if you do the math, if you're buying a $100,000 property, that's a $3,500 down payment. $200,000, that's a $7,000 payment. $300,000, 10.5, $10,500 down as a down payment. So you can do the math as you go up, but that beats putting 5% down, 10% down, 20% down in some cases. And I often get people reaching out to me asking me, hey, do I have to put 20% down when buying a property? And the answer is no. You can do FHA financing putting 3.5% down. And that's the biggest pro, in my opinion, in using FHA financing, is that they do allow a minimal down payment. Now, the second thing that FHA is known for that is a positive thing is they're a little bit more lenient on their credit guidelines. And what do I mean by that? Well, you can have lower credit scores with FHA and still qualify for a good rate with FHA financing, whereas conventional loans, the lower your rate gets, you start getting really high hits with regards to fees on the interest rate side. So the rate gets really high really quickly, whereas FHA is a lot more lenient. You can have credit scores in the low 600 and still get a relatively competitive interest rate as compared to conventional. So that is another huge plus when using FHA financing. Now, while we're on the topic here of leniency, not only are they lenient in the credit score you can get with regards to credit, they also are lenient with DTI. What is DTI? That is the debt to income ratio. So the amount of money that you bring home per month versus what your monthly debts are. That's a DTI. So conventional financing, they don't want to see you spend more than about 43 to 44% of your monthly income towards debt. That includes your housing payment, your taxes, your insurance, any car payments, student loans, credit cards, all of that stuff. So about 43 to 44%, give or take a little bit there. Whereas FHA financing, I've seen DTIs as high as 56, 57% in some cases get approved. So they allow you to use more of your income towards debt than, say, conventional, which means that in theory you're likely able to qualify for more home using FHA financing as when compared to conventional financing because of that higher debt to income ratio. And the last thing that is a pro with regards to FHA is the PMI rates. So when you buy a property and you put less than 20% down, you're going to have something called mortgage insurance. Mortgage insurance with FHA is typically lower than PMI with conventional financing. And that's why in some cases, if you're putting 3.5%, or if you're putting, say, 5% down, or in some cases even 10% down, you may be in a better position to use FHA financing, even though you can qualify for conventional, because the mortgage insurance is going to be less per month using FHA than conventional, and could end up with a lower monthly payment by doing FHA versus the conventional financing in that case. So those are the pros, at least in my eyes, the big pluses to doing FHA financing versus, say, a conventional financing. But let's talk about the downsides, the cons? What are the negatives of doing FHA financing? Well, the first one is going to be the fact of mortgage insurance is on your loan forever. You're never going to be able to get rid of that PMI unless you sell the property, unless you refinance out of that FHA loan into a conventional loan. Whereas if you are doing conventional financing, once you have 20% equity in that property, you can either refinance out of that mortgage into another conventional financing, just like you could do with FHA, or you could potentially call your lender, have them do, an AVM, which is basically an appraisal, or you could do an appraisal yourself, assuming the lender allows it, and showing that you have the equity in the property, and then at that point, the PMI would be removed. With FHA loans these days, the PMI stays on for the life of the loan. While that is a negative, the one thing I will say is that most people don't have one loan forever. Typically, people refinance every couple of years, people sell a house, buy another, so the chances of you having that same loan forever are very, very slim. So the downside of having PMI forever may not necessarily be a con, because you may not have that loan forever. Another downside of using FHA financing, another con if you will, and this is probably the one that I see the most people affected, at least as a real estate agent helping buyers with FHA financing, and that is the fact that condos have to be FHA approved in order to do FHA financing on them. What does that mean? That means every condo complex out there isn't FHA approved. They have to go through a process, provide certain documentation, certain financials as a community in order to meet FHA's guidelines of being an approved community. And so the reality is that most condo complexes out there don't want to go through that process because it requires a lot of paperwork, it requires upfront fees, it requires, this legwork, if you will, that a lot of people don't want to go through, and therefore, the complexes aren't FHA approved. So as buyers using FHA financing, here in Southern California, at least where I am, I would say at least 50% of the condos out there aren't FHA approved, which means if you go to buy that property with FHA financing and it's not FHA approved, you can't qualify for that property. Now, there are ways to get complexes FHA approved, but I'm not going to talk about that in this video. We're just going to talk about the fact that that is a negative, not having condos approved and having less available options using FHA financing. The third thing when doing FHA financing that's a negative is that it can only be used for an owner-occupied purchase. You can't use it for a second home. You can't use it for an investment property. It has to be your primary residence that you're buying when using FHA financing. So, you only have that option of buying a property as your owner-occupied residence when using FHA. So that would be a downside versus conventional financing where you can use, that loan for a second home, investment property, or what have you. The last thing that would be a con for FHA financing is loan limits. There are restrictions based on different areas of the country with regards to how high you can go up with regards to financing, and that would be a negative, especially if you're in a place where the loan limits are lower than the value of the property that you want to purchase. That would be a downside on using FHA financing versus conventional financing. Now, in addition to those pros and cons that I've mentioned here, there are certain requirements that you have to have in order to get an FHA loan. I'm not going to discuss that in this video, but I will link to it here where I discuss FHA loan limits for loans, FHA loans in 2020, that you can take a look at that video and see what the requirements are in order to qualify for FHA. But in my eyes, FHA loans are great loans. In the right scenario. I will tell you, in this market in Southern California at the moment, if you're using FHA financing, it's a little harder to get your loan accepted versus a conventional loan in most cases, just because people typically associate more money down with a stronger loan, a stronger buy rate, etc. So, when you're using FHA financing and you're up against a conventional offer, a lot of times your offer will be looked down upon, if you will, when comparing the two, when reality it's all financing and it doesn't really make that big of a difference. But keep in mind, when using FHA financing, it might be a little bit harder to get your loan accepted. And that's a whole nother video that I'm not going to dive into right now. But I hope that was helpful in explaining the pros and the cons of using FHA financing. You know, if you are in the process of trying to buy a property and you need to speak to a mortgage professional and you don't have one, reach out to me. I'm happy to put you in touch with somebody that can go over FHA loans with you, that can discuss that process in more detail and help you qualify if you're looking to get approved for FHA financing. And if you're looking to buy a property and you don't have a real estate agent, and you're in Southern California, reach out. Would love the opportunity to help. If you're in another area of the US, I can also help you get in touch with a real estate agent that does business like I do. I network with a lot of these professionals and happy to put you in touch. So, you know, definitely reach out there as well. But either way, I appreciate you taking the time to watch. I appreciate your support, and I'll see you again soon. Have a great day. Bye-bye.